What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our live stream for FOMC. So the Federal Reserve meeting is going to conclude at around 2:30 p.m. Eastern, and that's when they're going to release the statement and the summary of economic projections. So both of those documents are going to be released in 30 minutes, and then 2:30 p.m. is when Jerome Powell is going to take the stage, and of course there's going to be a press conference for 45 minutes to an hour, answering a lot of questions. And this is the first summary of economic projections for 2025. And we're going to get a lot of insight, a lot of data related to four of the most important things related to monetary policy. And those are economic growth, in other words, the GDP, unemployment rate, inflation, as well as interest rate expectations. So hope you all are ready. Markets are very indecisive, I should say. So we are very flat on the day here. We're still up a little bit over 0.5% on QQQs and SPY up over 38 basis points. However, we are very volatile. We're essentially trading sideways since we have opened. And of course, we've got a lot of data to break down in the next 30 minutes until these numbers come out. We also have a poll going on right now, and participate in the poll. It's essentially a question: markets after Jerome Powell today. Are you expecting a rally, or are you expecting a crash? And this is crazy because this is a 50-50 poll right now. We do not have any majority, and so this kind of speaks to the indecisiveness in the market right now. Because at the end of the day, everybody here makes the market, right? This is a small data set, but if you extrapolate it in the entire world of investors, this is the indecisiveness that we are facing right now, as nobody really knows what's going to happen, and there's a lot of uncertainty, and there's a lot of questions around where the markets are headed. Are we going to see further downside, or is the bottom already in? So get ready. Of course, this Friday we also have the triple witching, where a lot of index options, futures, and stock options are going to expire at the same time, which is going to create some volatility. Volatility in general has been a little bit more elevated in 2025, and we are just hovering a little bit over 20 right now. So definitely do participate in the poll, and do me a favor and share this live stream with other traders, investors, in other groups, with your family and friends, so we can listen to what Jerome Powell has to say for monetary policy, and of course take a look at the interest rate decision as well, where 99% of investors right now, the 99% market probability right now is for us to see rates where they are. So in other words, no change. Interest rates are expected to stay where they are. The most important document from this meeting is going to be the summary of economic projections, and that is going to once again give us a little bit more insight into interest rates, inflation, economic growth, and GDP as well. So coming over to my spreadsheet, as we have already talked about this in our previous updates as well. So if I come over to this is the last 17 meetings, 17 FOMC meetings, and this is essentially the action the Federal Reserve has taken in the last 17 meetings, right? So we essentially got a jumbo cut back in September of 2024. The Federal Reserve cut interest rates by 50 basis points. That was a jumbo cut, and then another 225 basis points worth of cuts. So that all in all was 1% cut in 2024 from the Federal Reserve. And of course, the January meeting, we essentially stayed for interest rates, right? So the FOMC didn't do anything in the last meeting in January. This right here is whether this meeting was accompanied by a SEP or not. That's the summary of economic projections. And of course, this meeting, we're going to get one. And this is the market's performance on the day of. This is one day after, and this is 1 week after the FOMC meeting. So this was all the conclusion from the research that I just did. 17 meetings in total, of which 9 times we actually went down on the day. So yes, on the day, there is a lot of uncertainty. It's just as good as a coin flip, where 53% of the times we actually have gone down, 47% of the times we've gone up. But when you extrapolate to 1 week out and 1 day out, so in other words, tomorrow and a week from today, there is a 71% probability that markets have been higher. And this is based on the last 17 FOMC meetings over the last 2 years. And the average median gain has been about 0.35 to as much as over 0.5% 1 week later. On the days when we have received the SEP, that's a summary of economic projections, same exact statistics, 75% of the times we have been higher 1 day after the FOMC, and 63% of the times we have been higher 1 week after the FOMC meeting. Something to keep in mind, as well as some of the other statistics and data that I shared with you guys in my previous update, where this was one of the fastest corrections for the market. In just about 20 days, we were down close to 10% from our all-time highs, right? So that is a quote-unquote correction for the S&P 500. And in the past 6 times, we've actually seen this quick of a correction. In other words, it's taken us anywhere from 8 to as much as 20 days. 6 out of 6 times, the markets were higher 3 months later. So this also has a 100% track record. This was from Fundstrat, and they did this analysis going back as far as 1950s for 6 of the fastest corrections that we witnessed. And of course, in 2025, this was the 7th fastest one, with once again having a 100% track record of pushing up 3 months later. This right here is also the market thrust indicator, which we had discussed in our previous update as well. So 2 consecutive days, which were Friday of last week and Monday of this week, we did see a little bit of a relief rally or a technical rebound for the markets, as we had already discussed. We are very oversold. Volatility was hitting highs of almost 29 to 30. So it's only a matter of time. We were going to see a bit of a technical rebound. And every time you've seen 2 consecutive days of more than 90% of S&P 500 stocks advancing on the day, which is what we witnessed on Friday and Monday. 2 months later and 3 months later, the probability is once again very, very high for the markets to be higher, close to 100%. 2 months later, every single time, we've seen the markets up by an average of 4.5%. So yes, there's a lot of probabilities and a lot of statistics in the favor of the bulls, especially after we have seen this market selling off so aggressively. So all of this now really boils down to today's Fed meeting. And it's really going to come down to the Federal Reserve and Jerome Powell to either make things much worse from where they are now, or to give us a little bit of hope, a little bit of this relief rally that the market's been so desperately waiting for a long time. Now, we do have, of course, a lot of these individual stocks pushing higher. So coming back over to the MoneyVest platform, 2.88 is the MoneyVest index right now. So we're still within uncertainty at the moment. In terms of market concentration, you've got $271 billion worth of inflows right now, with most of that market cap coming in to NVIDIA. Again, lots of new announcements, lots of new AI infrastructure spend, and Jensen Huang talking about trillions of dollars of buildup needed over the next several years and even decades to essentially transform the entire industry. And of course, a lot of companies that are going to be using artificial intelligence, or they're building the brains behind this entire AI revolution. Tesla here also $33 billion higher. Apple pushing up, Google, Broadcom, Microsoft. So a lot of these big tech, Magnificent Seven companies, once again, seeing some liquidity flooding back into these companies. So very quickly, I am going to break down what we're going to be waiting for and what we're going to be watching right at 2 p.m. Eastern, just so we're on the same page. This is the exact Federal Reserve website. So for everybody who's joining us for the first time, this is the Federal Reserve website. And what we do here is at 2 p.m., right at 2 p.m. Eastern, I'm going to reload this page, and I'm going to find 2 things right here. There's going to be a statement, and there's going to be a summary of economic projections. First things first, I'm going to quickly open up the statement to see what the Federal Reserve did with interest rates. And the only line that I'm going to read quickly is right about here. In support of these goals, the committee decided to do what? Raise, lower, or maintain their target range. 99% probability, as per the market's expectations, that this word is going to be maintain the target range of the federal funds rate at 4.25% and 4.5%. That's where we currently are, and that's where we're expected to be once this statement is released. So very quickly, going to open this up, going to read this line, and then move over to the meat of the actual report, which is going to be the summary of economic projections. And it's going to look something like this, which is going to be the projection materials. And the first thing, the only thing that the market's really going to be watching for is going to be this 2025 column. Scroll all the way at the bottom, this number right here. That's the only number the market's going to care about. That's it. Nothing else matters. It's really understanding what this number is going to be. Is it going to be 3.9? Is it going to be 4.1? Is it going to be 3.7? So are we going up or down or staying where we are for this specific number? And of course, then 2026 and 2027 numbers are also going to matter. But the most important is going to be this 2025 number from the Federal Reserve. So hope you all are ready, and I do believe and I do expect. Again, I'm not one for making predictions, but I do expect the Federal Reserve to either keep this number unchanged, keep it intact because they need a lot of clarity. They need more insight into the new administration and what kind of policies are coming through from Washington, or it will see a slight decline, maybe coming down to 3.7. I would be very surprised if the Federal Reserve increases this number back above 4%, and that would simply mean the Federal Reserve is expecting fewer rate cuts than what they told us back in December, and that would obviously not be good news for the market. So this is going to be the most important number the market's going to be watching for at 2 p.m. Eastern today. So hope you all are ready, and markets right now, like I said, very, very flat. And since we do have about 15-20 minutes, I'm now going to jump over to the comments. Once again, everybody, thank you so much for joining. Really appreciate you all. And do me a favor, subscribe to the channel as well. We're very close to 98,000 subscribers as well. So hopefully by the end of this month, we're going to be crossing over that major milestone of 100,000. So I really do appreciate all of you. And our MoneyVest family, our entire community is going to be 100,000 people strong, which is going to be a dream come true for all of us because we've been at it for the last 4 or 5 years. Even during the depths of the bear market, we were here doing live streams every single day. I've been here every single day with a few exceptions when I was sick, but I've been here either videos or live streams for the last 5 years. So I would really appreciate that. Drop a like and subscribe to the channel as well. Okay, let's see some of the comments here from all of you. Simran, thank you so much for joining. Really appreciate you. Good afternoon, everyone. Let's get it. Albert says, let's ride. 2020 in the house, been waiting for this all day. So exciting stuff. Crypto super bullish. Yeah, so Bitcoin was pushing higher last time I checked, pushing up close to 1.8, almost 2%. Kathy Wood was earlier on CNBC talking about her $1.5 million target on Bitcoin by 2030. So that's 5 years out. And of course, 1.5 million would just be insane. And Mohammed Al-Rain was also on CNBC. I shared this in our Discord as well, talking about how the dollar is definitely going through some vulnerability because investors are really considering gold as a safe haven asset. And as a result, gold, of course, is hitting new all-time highs, as I showed you guys in my market updates, now sitting at well over $3,000 an ounce. So this is a commodity, this is a precious metal that has seen a lot of resurgence in capital. And there's just been overall excitement in gold, as well as silver, right? Silver's also been on the move, and I think that silver to gold ratio has been coming off. This right here is silver's rally since 2020. It is up over 189, more than doubled, almost tripled in that time period in the last 5 years. So these precious metals certainly getting a lot of liquidity flooding into them because of everything that's going on from more geopolitics and from a trade perspective worldwide. So let's see. Powell's going to stick it to Trump. At what time is the meeting? So El Toro, the meeting's at 2:30 p.m. Eastern. So in about 45 minutes is when Jerome Powell is going to start talking, but we're going to get this statement in about 20 minutes or so. So we are going to, read the statement, the SEP, and of course, then wait for Jerome Powell's speech. And the poll is actually very interesting. We got over 600 people participating, and we're still pretty split. 54%, just a slight majority, is expecting the markets to rally, but still 46% are expecting the markets to crash. So, this is a very, very split poll, and it's not like we only have like small number of people. We have over 600 people that are participating in the poll, and I'm sure like by the time Powell starts talking, we're gonna have close to 1,000 votes. And then even then, it's going to be pretty split. So it gives you a little bit of a idea into sentiment, right? So might as well just use the power of our community to better understand where sentiment is, do a little bit of our research on our own. And you can see, that you can extrapolate this data set to, pretty much the entire world. And that gives you a bit of an idea why the markets have been moving sideways because of all this indecision around trade wars and growth scare and just a lot of uncertainty that's been coming out of Washington. So, let's see. David says, I would say selfish is keeping market overpriced and having low returns for a long time. Let's have the pain and progress from there. Yeah, so, the thing is that as markets come down, as prices come down, risk comes down with it, right? So your future expected returns only increase. So that's one of the best things about markets correcting and seeing a bear market, is that it kind of resets. It resets those future return expectations, and as valuations come down, Nvidia, for example, is trading at its lowest valuation since 2022, and prior to that, 2019. So we haven't seen Nvidia trade at these levels for over 3 years, and then prior to that, over 6 years ago. So we're pretty much trading at those levels now once again. And companies, there's a lot of stocks right now like Walmart, Costco, that are trading at significantly more valuation wise compared to something like Nvidia. So there's a lot of uncertainty. There's a lot of fear, I'm sure, around technology, around Magnificent Seven, but there are bargains. There are a lot of deals out there that I think are worth taking. There's a lot of companies. I mean, if Nvidia, trades back below 105, 106, I'm going to plan to add another couple hundred shares, get my entire shares close to 1,000, right? Right now, I just have over 800 shares. I'm planning to get up to at least 1,000, maybe even a couple thousand, depending on how low Nvidia gets down to. Same with Amazon, Google, Microsoft. These are all companies that I really like. I do like Fortinet, but of course at lower levels. And there's a lot of companies that we've analyzed. Arista Network is one of them. ASML is another one. Intuitive Surgical, even Meta Platforms, I think is trading at a very, very attractive and good valuation right now. TQQQ is something that I've been dollar cost averaging into. I'm going to be buying more of if this market continues to sell off further. And then even Bitcoin ETFs like BITX. But these are, again, a little bit more leveraged plays. So we have to be a bit more careful with those. Cadence Design Systems is also part of that shopping list. Got my buy targets ready for those. And then, of course, FNGA, a little bit more on the leverage side, but primarily focusing on Magnificent Seven. So there's certainly opportunities out there, right? There's not like you don't have to do anything. Obviously you need to create some separation between your dollar cost averaging. It's like, you want to actually make a dent in your cost basis. You don't want to be buying at the same price every week, but allow for the prices to get down further so you can actually move your cost basis lower. There's no point in just dollar cost averaging at the same level. So allow for the prices to come further down so you can create that separation. And that's how you're, kind of building your position up and accumulating more shares and lowering your cost basis at the same time. Okay, let's see. Hey, by the way, 2020 in the house, thank you so much for that donation. I really appreciate that. Thank you for doing this live. You're the best in YouTube. Thank you. Appreciate that. And there's a few other creators that I do definitely look up to, super, super respectful for them as well. But yeah, thank you so much. I don't consider myself to be best in anything. Like I said, we're all students here. We're all trying to learn as much as we can. And I'm also learning every single day, right? So I have this mentality every single day. I go to Discord, I go to YouTube to learn. And as much as I can learn, the better I will be over the long term. And it's really just making small progress over many, many months and many years. And it all compounds, right? It's just like how time and money compounds, your knowledge also compounds every single day. And just making progress, even if it's a little bit, just makes a huge difference after a long time. So, okay, good luck, everybody. Speaking of gold, do you expect a bit of a pullback or correction in gold? Is it a good time to invest or wait in cash a bit more? So, Emre, I would say that technically speaking, yes, there is, definitely very overbought conditions right now. We've moved up quite a bit. But in this entire uptrend, you will see quite a few times where, these pullbacks and these corrections will happen for gold as well. So if you can wait, I think that would be best. If we see 2,500 again, that would be a very, very good level to be buying a little bit. And this right here, 2,840 is going to be another area of support that we were kind of hovering at before we broke out to new all-time highs. So yes, while it's in a very strong uptrend here, but you will see corrections and small little dips and pullbacks along the way. And this is something that is, I've mentioned this before, gold is not something that is meant to give you that outperformance, because if you compare gold prices to S&P 500, S&P will beat out gold every single time. And that's what it's done. Not saying that it's going to do it in the future, but that's what it's done. Gold is primarily as a safe haven asset, very good for asset diversification as well as protection against any kinds of currency runoff. If there's more printing, if there's a significant increase in inflation, gold kind of gives you that safety and that protection against those things. So it is not an asset that you can invest into looking for outperformance, because there's other places where you can get a lot of outperformance. Gold is primarily going to be for more diversification purposes and for asset protection, so to speak. Okay, let's see. Up 20,000 on my Boeing leaps. That's incredible. Your thoughts on Tesla? I'm looking to pick some more shares of Tesla here. I would say the valuation is something to be mindful of for Tesla. We are, Still trading well over 100 times earnings. Not saying that it's a super expensive stock, but it's not cheap either. It is technically oversold. So, if your plan is to simply trade this on a more swing trading basis, this is a very attractive level, especially when you consider that, we're incredibly oversold. And on an L3 banker oscillator basis, we've got some big orders coming in for Tesla. So this is going to be purely technical, but anybody who's looking to invest long term in Tesla, this is a stock that I haven't touched in such a long time. I've only been trading calls on this, but I haven't added to my position, or I haven't bought or haven't sold any puts against this because of the pricing. If it trades down in the 150s, if that happens, then yes, you can make a case that, okay, it's now fairly valued. But even right now, from a long-term perspective, I think we just have to be mindful of the expensive multiples that it trades at. But technically, yes, it's oversold. We can get a nice little swing trading bounce here. Resistance is going to be as much as 273, 275. But the entire market has to get a little bit of a lift. Tesla alone, it's going to be hard to see that outperformance if the entire market continues to sell off. So that's, I think, really important to keep in mind for Tesla. Okay, let's see. Appreciate if you review ALAB. Using Robinhood and don't see the option to buy gold. Can you please tell me what platform you use to buy gold? So there's basically an ETF, right? There's going to be an ETF. I think GLD is the Spider Gold Trust, which also you'll notice is hitting a new all-time high. And looks like we were talking about this, a long time ago, and it was consolidating sideways, and it actually hit a new all-time high. So GLD is like a Spider Gold Trust ETF, $87 billion of assets under management. Pretty strong liquidity in terms of volume as well. But I personally do prefer a little bit of physical gold as well. Paul, yes, I do like his channel as well. I think he's from Australia, right? Very, very good information. Very, very solid data-driven analysis. All right, everyone. So we got about 7 more minutes. 7 more minutes until the statement and the SEP is going to be released. And then we'll see what happens with the market. What kind of reaction do we get? And then, of course, we'll listen in to Jerome Powell at 2:30 p.m. Eastern as well. We're at 861 votes. I want to get at least to 1,000 votes until the statement release. And then we'll try to get up to 2,000 votes by the time Jerome Powell takes the stage and starts talking. So definitely do participate in the poll. I'm going to be, obviously very excited to see where these polls end up by the time Jerome Powell is talking, and by the time he's done talking, because right now 53% rally, 46% crash. And also do share how much cash percentage, if you're comfortable, how much cash percentage you're sitting on, so that we can get a little bit of an idea from our community, how much cash percentage is among investors among our community, so that we can kind of understand everyone's strategy right now. So I'm sitting somewhere between like 20 to 22%, somewhere in the mid 20s right now. I'm actually in the process of also closing in on a house. So we'll definitely need some cash for that as well. But other than that, sitting on about 20 to 22%. So I got 12%. Annual topic is 70% cash. That is an incredible position there. Vinny is sitting at 95% cash. Jesus, 76, 100%. You guys are just balling right now in cash, just getting ready to deploy. We got 7%. We've got $5, 15% cash. Jordy's 15%. Not bad. We got Robinson at 10%. Vape is 100% Bitcoin. 100% cash now for 3 to 4 weeks, Freddie says. Man, perfect timing there. All in already, Sal says 60%. We got 25, 40. So we kind of like all over the place. And I think we did a very similar poll in our Discord as well. I think majority of people were sitting somewhere around 15 and 20%. So yeah, but like I said, everyone's got a different strategy. If you're a long-term investor, then the one thing that I've told myself as a long-term investor is to never try to time the market. And so I always play around with my cash exposure, but my strategy has never been to sell stocks in anticipation of a correction or a bear market or a recession, because that may or may not happen. And the markets can be, irrational longer than anyone can be solvent, and they are irrational actually on the way up more than they are irrational on the way down. And the reason is because 72% of the times over the last 200 years, markets have gone up. So if markets have gone up 72% of the times, that means that over the long term, the trend is very solid, given the fact that earnings growth has been very strong and there's been broad-based leadership among tech companies in the US. So I think we have to be very mindful of that. If leadership changes all over the world, if there's emerging markets, if there's European markets, if there's markets over in China, that's where the leadership is, of course, money is going to flow into those parts of the market. And that's what's been happening in 2025. US is actually underperforming the likes of European markets, especially German markets and China. Even other emerging markets like Mexico and Canada has been outperforming the US as well. So those are some things that we have to always be aware of, that just because it's worked in the past doesn't mean it's going to work forever. It's only going to work if what's happened in the past keeps on happening, which is earnings growth is there, and of course there's market leadership. Okay, so we got about 4 more minutes for the statement and the SEP. I'm going to reload this page as soon as 2 p.m. hits, and so we are going to be ready. 99% probability that the Federal Reserve is going to keep rates steady and unchanged exactly where they are. And then, of course, we'll see what the statement says and then what the SEP says. Again, 2 numbers that are going to be the most important. The first one, the statement itself, whether we're getting a rate hike, a rate cut, or a maintaining the rate, in other words, unchanged. And the second one is going to be the 2025 interest rate expectation from the Federal Reserve, right now sitting at 3.9%. So coming over to this analysis here that I was doing, I think it was this one. Yep, so this one, this is where we currently are, 3.9%, and the March projection is going to get updated. If this number goes down, we could see a bit of a bullish reaction. If this number goes up, I think we need to be ready. We need to really brace ourselves. If this number goes down, goes up, markets could see a bit of a negative reaction. Okay, couple more minutes. 2 more minutes, everybody. 2 more minutes. Wow, we got over 1,100 votes. That's perfect. Perfect. Who's excited? Who is excited here for these numbers? Yeah, ET says keep a minimum of 3 months savings if a bear market hits or there are opportunities. Otherwise, a max of 12 months. The rest is for dollar cost averaging. I agree. I think it's really important to have an emergency fund, have some liquid savings set aside. And then, of course, the rest of it can be after maxing out your 401ks and your tax advantage accounts, depending on where you are. That's when, after that, you can start looking at investing in individual stocks or even broad-based ETFs. So how is your indicator called when you see the big order inflow that you showed at Tesla? So that is the L3 banker oscillator. It's not my indicator. It is just on TradingView, created by another, trader. So it's called L3 banker oscillator, which keeps track based on volume, some of the bigger orders that have come in. And we see a lot of accumulation for AMD, by the way. So if you come over to Advanced Micro Devices, very quickly, I'm going to show you guys. AMD, since it's been selling off very aggressively, but if you come take a look at the Advanced Micro Devices accumulation, it's been happening over the last several weeks. Take a look at this, right? This is all of these big yellow bars suggesting for big money accumulation that's been happening for Advanced Micro Devices, and it was also creating some positive divergence. So keep a close eye on AMD. A trend reversal is possible eventually, given that we have been on such a strong downtrend of lower highs and lower lows. Okay, last minute. Here we go. 60 seconds. I'm going to reload this page as soon as it comes out. We're going to first read the statement and then look at the summary of economic projections. Do me a favor, drop a like, and don't forget to subscribe to the channel. We're very close to 98,000 subscribers. I would really appreciate that. And hopefully by the end of this month, we're going to be celebrating our 100,000 subscriber family, all of us together. So here we go. It's like New Year waiting for the countdown. Yeah. But unlike the New Year where nothing changes, it's just a brand new day. In 20 seconds, a lot of things change. A lot of money moves in 20 seconds. So it's kind of like the New Year's, but it's not the New Year's. All right, 10 more seconds. I'm kind of a little bit nervous for this one. I don't know why. Okay, let's do this. It's 2 p.m. I'm going to reload it as many times as it takes. March. There we go. Statement is out and the projection materials. So they maintained their target range, and coming down to the projections, 3.4 was 2026 and 3.9 is 2025. So unchanged. They did not change their expectations for the interest rates throughout. Not for 2025, not for 2026, and not for 2027. So these are your updated projections for the 2025, 2026, and 2027 interest rates. They did not change them at all. And for interest rates, they kept them intact. They also did not change the interest rates. So nothing really. No changes to the actual interest rates, and no changes to the 2025, 2026, and 2027 interest rates either. They are, however, expecting higher core inflation. And that would beg the question that if they are expecting higher core inflation from 2.5, they've updated this number to 2.8% for this year. And for headline, they've actually updated from 2.5 to 2.7%. Why would they not increase interest rate expectations? I think that would be one of the first questions they'll get asked. The second question is, if they are seeing a higher chance of unemployment accelerating from 4.3 to 4.4%, and at the same time they're seeing the GDP numbers come down from 2.1 to 1.7. So on one hand, they're expecting higher inflation compared to their December projections, and on the second hand, they're expecting a weakening economy with slightly higher unemployment. So that in itself is not the best scenario. Because if you come over to dual mandate bullseye, right? So I've showed this on our channel before. This is the bullseye chart. This is the Federal Reserve's actual dual mandate. And this is essentially showing us where the Federal Reserve wants to be for both inflation and unemployment. They want to be somewhere right there in the middle, right? Because that's where inflation is at 2%. That's their target. And unemployment is just slightly above 4%. Now, if they're expecting for inflation to accelerate, in other words, increase, right? That simply means that originally they were somewhere over here at 2.4, but now they're expecting 2.8. So they actually went higher on this y-axis because they're expecting higher inflation, but at the same time, unemployment, they're no longer expecting 4.2, 4.3. They're expecting 4.4. So they're going to be closer to here. So if you really think about where we were back in December, we were somewhere over here, right? This is where we were for Federal Reserve's expectations for both inflation and unemployment. This dot ideally should be coming down here, right? That's where the Federal Reserve wants to come down to. But we just went from here to a little bit more further right. And this is the worst quadrant to be in. This is literally the worst quadrant to be in because in this quadrant, in the top right quadrant, you're both higher on inflation and higher on unemployment. So I think the Federal Reserve will definitely have a lot to talk about in this speech that we're going to get in about 22 minutes because there's a lot of questions that even I have from this SEP that they're expecting lower than expected economic growth. They're expecting higher unemployment rate. And they're expecting higher inflation, but they're keeping interest rates intact. I'm just saying, I think there might be some political influence there because any kind of interest rate increases now are not going to be very well received from Washington. It's definitely not going to be well received from the new administration. So, there's going to be a lot of pressure for FOMC and for Jerome Powell. Because in an ideal, this also sort of tells you what the Federal Reserve is really prioritizing, right? This also tells you what they're really prioritizing at this moment, which is avoiding a recession, right? So, and avoiding a recession, in my opinion, should be a priority after fixing inflation. If avoiding a recession becomes a priority above avoiding a situation with high inflation, then things can get more painful and much worse if inflation is not back under control. So if they're expecting inflation to be higher, we're actually moving in the wrong direction than where we want to go. So something to definitely think about for Jerome Powell and, of course, the Fed. And I'm sure they're going to have a lot of questions about this. So hopefully this explains a little bit. But yeah, bottom line, we got no change from the Federal Reserve on interest rates, and we also did not get any changes on interest rates for 2025 and 2026. So not really much of a reaction from the market. Initial burst higher, but I think that initial burst almost always has been a bit of a fake out for the market, and we're now starting to see a little bit of rotation back lower. Okay, so we got about 20 minutes. If you have any questions, let me know. I'm here, obviously, and we're going to be listening in to Jerome Powell in about 25 minutes. But until then, I'm more than happy to answer any questions, macro-related, fundamentals-related, technicals-related, anything stock-specific. I can spend a couple minutes, go over the technical analysis. And again, if you have any questions, just let me know, because I really want this live stream to be helpful for all of you. And so I'm here to provide as much analysis and value as I can. Just do me a favor. All I'm asking in return is that you hit the subscribe button. So if you haven't subscribed, we got almost 2,000 people watching. And if you're not subscribed, definitely do, because it's going to greatly help us, get to our targets, get to our goals together as a community. Okay, I'm going to try my best to cover as many companies as possible, because I know there's going to be a lot of them coming in. So let's see. Hawkish is bearish. Yes, I'm confused. So, for the market, from a monetary perspective, hawkish is usually not bearish. Hawkish is usually bearish. Yes, you're right. Hawkish is usually bearish for the market, but this report that we just got wasn't really hawkish per se, because we are still getting 2 rate cuts this year. The markets were pricing in 3, then we moved back lower to 2. And then now the Federal Reserve's also still sticking to their guidance of 2 rate cuts for this year. So we didn't really see a much change from the Federal Reserve's guidance. And I was kind of inclining to that as well. Mentioned that maybe 3.9 to 3.65, maybe they lower their estimate a little bit further. But 3.9 was kind of spot on where we are right now and where we're headed potentially, right? That's going to be 2 rate cuts. So yeah, the speech is really going to be very important now for today. Okay, let's take a look. Is it time to dump or buy gold? Well, depends really on the strategy, the time horizon that you have. Me personally, I'm going to continue to dollar cost average and buy gold every chance I get. So every few months I will pick up a little bit of gold, and for me that's mostly long term. So I'm not really looking at trading gold right now. What's your thoughts on the Tesla that you did a covered call? So I actually closed out my covered call today for a 94% profit. So I'm completely out. And then I actually opened a new one. I sold a $500 call on Tesla for December. So the reason I did 500 is because I wanted to, go 100% out of the money. So the last time I sold a call was right around here when Tesla was at an all-time high, at well over $450, $460. And that call strike was 800 and 850. Of course, that was another 100% rally for Tesla, which was very unlikely. And both of those calls expired, didn't really expire, but they were up like 95%. So I closed all of them, and then I've opened the new ones. One of them is 600, the other one's 500 call strike for Tesla. So if you do see any kind of rally, I am protected all the way up till $500. So if Tesla more than doubles from these levels, even then I'm going to be fine with the Tesla at a $500 call strike. Okay, let's see. So overall, a good or bad thing for the market. I don't like the fact that they've actually increased their expectations on inflation, and they've kept the interest rates unchanged, because that, I think, is going to be question number one. Is if you're expecting higher inflation and you're nowhere near close to your target, if anything, you're moving away from your target, why are you keeping interest rates intact, still forecasting for 2 rate cuts? I mean, if inflation were moving higher and you're moving rates lower, wouldn't that make things worse? Wouldn't that make things worse if interest rate get cut 2 more times? Wouldn't inflation be vulnerable to go up even more, right? That would be the most rational, most obvious question, that Jerome Powell is going to be asked today. Okay, wow, Xiaoping, so many companies. Go over NVIDIA and what are your thoughts over yesterday's event? So I think overall, the event was good. It was very similar to what we had seen last year. But a lot of breakthroughs happening for NVIDIA, and I continue to be very optimistic over the long term. And as I said, valuations very attractive at low 100s. I will be buying more. I'm gonna not shy away from dollar cost averaging, whether it's in the low 100s or possibly down even in the 70s or $80. So for me, NVIDIA is a winner long term, and I will continue to dollar cost average into this. Yes, it's been somewhat hurting near term, and it hasn't moved much in the last 6 to 9 months, but I think that's what happens, right? Markets oftentimes, and that's the difference between NVIDIA and Tesla. NVIDIA had a more fundamental driven move. Tesla had a more political driven move. And when a company is moving up so parabolically on everything other than fundamentals, it is also bound to crash like Tesla did over 50%. Whereas with NVIDIA, yes, it did rally based on fundamentals, and so it's actually stabilizing. It's actually holding up those gains much better than any other company. And so as we give earnings time to catch up to the valuation, now it's actually starting to look very attractive, right? You go back, you go back 9 months, right? Back in May of 24, almost 12 months. 12 months ago, earnings were nowhere near close to where we are now, but the price was still the same. So valuation 12 months ago was more expensive than what it is now for NVIDIA, even though we're at the same price. And that simply means that earnings have really risen over that time period, and it's given the time to allow for earnings to catch up to the valuation. And so now all of a sudden, same price from 12 months ago, but NVIDIA now is cheaper than it was 12 months ago, simply because of the earnings increase that we've seen. So valuation is very attractive, like I said, for NVIDIA, for a lot of companies out there, even Meta, Google, a lot of these, even Amazon, I love that stock for where it is right now. Okay, when using the MoneyVest Analyzer to use the current net income or the future net income in the NVIDIA analysis to use the future 2026 income, would you need to do the same? Yes, so James, great question. If you do the autofill feature, it's going to automatically plug in the trailing 12-month net income, but you can adjust that number. You can look into what the company is guiding for. You can look at their next year's forecast, and you can price that number in, or you can look at analyst estimates and plug that number in. So it's completely up to your disposal, whatever you want to plug in, whether it's the trailing 12 months, whether it's the forecasted net income, whether it's analyst expectations, whether it's your own number, you want to be a bit more conservative. So it's really something that you can use to analyze for yourself. For NVIDIA, yes, I did go over 2026 net income, and I actually went a little bit lower than I think what the average analyst estimates were. And then forecasted with a growth rate, which again was lower than what the analyst expectations were, and even what NVIDIA has grown in the past 5 years. Reason I do that is because that creates a margin of safety. And even if things don't work out as they have worked out in the past, even if you go lower on the growth rate, we're still protected with that margin of safety. So as I've said before, I'd much rather be conservative and right than be aggressive and wrong. Because if you're aggressive and wrong, then you can really have a disastrous position. If you're conservative and right, that is just how realistic probabilities will be. So, okay, all right, let's see. SoFi, I'm going to take a look at very quickly, and let's talk a little bit about Palantir as well. So SoFi has been under a lot of pressure technically as well. This is a stock that's been selling off, as we already know. Pushing up a little bit today, 5.5% higher, back up to over 1250. Support level 1168. Very, very oversold, and it's now starting to see some bigger orders coming in. This is the first time we're actually seeing that since July 2024. And if you go back to the L3 banker oscillator, oftentimes you'll see a lot of these areas of accumulation burst to a bigger move to the upside eventually. So, over here, you'll notice SoFi was going through a lot of accumulation. It was trading sideways, didn't really see a lot of move, but look what happened here. Lots of big orders coming in, according to the L3 banker oscillator. And then eventually, we had SoFi rip, to a 52-week high, getting up to over $16, $17, almost 200% rally. So once again, we're starting to see some institutional orders coming in for SoFi, the first candle coming in, and resistance right now is going to stay put at $13.50 to as much as $14.85, $15 for SoFi. Interest rates obviously play a big role. It is a little bit more macro-driven stock, so that in itself makes it somewhat unpredictable in terms of what's going to happen with interest rates, or what's going to happen with lending, what's going to happen with rates on mortgages. So all those things definitely play a big role on SoFi, but they have been doing really well in terms of growth in Galileo accounts, customer accounts, total products, and just the overall profitability. Path to profitability has also been very strong for SoFi. Okay, let's see. Definitely need some water. Been talking for a long time. I'm going to take a water break here as soon as Jerome Powell starts talking. But let's see. Let's go over. So Palantir we covered. Palantir, let's go over to that one.